Good morning, ladies and gentlemen. My name is Greg Michalowski. We have CPI data coming out shortly. 0.2 is the expectations for the headline number. 0.5% is for the core. The headline year on year is expected to dip to 8.7% from 9.1%, while the core measure is expected to move higher to 6.1% from 5.9%. So there is a bit of a mixed potential there for the data, which could cause the markets to move around in a volatile price action. So be aware of that. It's not cut and dry off the headline number this month. So take a look at the euro versus US dollar. We are seeing a move to the upside here in that currency pair in the European session today. We saw the price base near the 100 and 200 hour moving average. We had one final dip below the 100 hour moving average, which failed. A lot of times that might happen before the market starts to move higher and the sellers turn to buyers, and we move all the way up to this swing area near the 102.54 to 57 area. The market is just coming off of that level after peaking just above it. Needless to say, we've been in this range here. The high price that we saw in trading last week reached 102.93. Which was above the 50% of the move down from the June 27th high. So getting above the 50%, getting above the 102.933 level in the continuation of today's move to the upside, that would be on a lower dollar move, then would be the targets to get out of this quagmire that we've been, this mud pit that we've been stuck in on it if the dollar goes higher. However, getting back below the 100 and 200 hour moving averages obviously would be tilt to the bearish direction. We have been holding support against that level for the last few trading days, or trying to hold support against that level. We had a few dips below the level, but buyers always came in against those levels. So that's the euro versus US dollar. The dollar versus yen had a very narrow trading range in comparison to the recent history. Only about 54 or so pips yesterday, with the average trading range of the last 22 days at about 153 pips, which is pretty high. But the 54 pips was, as you can see, very narrow, and today we're continuing that with a move to the downside recently with some dollar selling going into the CPI data. The rising 100-hour moving average and this swing area is going to be the barometer for bullish above, bearish below through that number. On a move to below, a move back below the 200-hour moving average would be more bearish for that currency pair. Then we'd start to look toward this swing area between 132.24 and 132.43. Finally, I want to take a look at the sterling versus US dollar as it's moving up back above its 100-hour moving average in trading today. That level comes in at 129.95. That's going to be the barometer for bulls and bears. If the price can if price moves back below that level on a dollar rise move, would be looking toward this swing area at 120.64 to be confirm the move to the downside and further momentum in toward the 50%. If the price should move higher, getting and staying above the 200-hour moving average would be key. My name is Greg Michalowski. Good fortune with your trading. Understand that risk is going to be increased through the CPI data, so be careful. Make sure you use proper risk tools, understand your levels, and trade the plan. Bye-bye now.